Welcome to the second clip for Chapter 6. And we started off by dealing with question 6.7 on idols traders, just the A part of the required. That was included in the first question clip, where we entered the transactions in the general journal of idols traders. So today we're going to deal with the B part, where we have to prepare both the VAT input and VAT output account, and then close them off to the VAT control account. You remember we have to round off to the nearest cent, so we do not round off to the nearest rand. In the given information, the following information regarding transactions of idols traders, as well as this part that we are going to deal with today, totals of the journals from 31st March 20.2. That was the closing totals of all of these different journals with the column heading and then the amount given. Let us quickly have a look at each of the journals and just identify whether this will result in an entry in the VAT input or the VAT output account. The debtors journal, we sell to debtors, so our inventory will be going out. Also, we are sitting with the money, so we will have to pay South African Revenue Services the VAT that we are sitting with. So this will result in an entry in the VAT output account. It's the debtors column, and the debtors column is the full amount, so that will be the 114%. We don't want to account for the amount including VAT. We only want to account for the VAT for this. So to get to our calculation, we'll have to multiply this 6,589 with 14 out of the 114. So we will be dealing with that in the VAT output account. Then the debtors allowances journal is a return from debtors to the entity. So if this was a liability created towards SARS and this is not a valid sale anymore, we will have to reverse that liability created in the VAT output account as well. And luckily in this case they provided us with the VAT column, so we can use the 84 Rand just as it was provided. In the creditors journal now, that is for the purchases on credit of items or incurring expenses and not paying it for us straight away. So this will result in an entry in our VAT input account. Remember, you've already received the benefits, so you can claim back this VAT from SARS. That's why it will result in a VAT input. Again, they provide us with the creditors column, which is 114%. So to get to the entry in the VAT account, we'll have to multiply that with 14 out of the 140. For the cash receipts journal, cash receipts is for the sale of goods again. So we'll have to create a liability for the VAT part that we are supposed to pay over to SARS. They give us the VAT column, so we can just use the 4,930. And for cash payments, which is the opposite of a receipt, this will result in an entry in the VAT input account. And where applicable on the cash payments transactions, they've already calculated the VAT for us in the VAT column, so we can just use the 3,650 that was provided. Remember, in all of these transactions, we already prepared the general journal, and from the general journal, there will also be postings over and above these totals. For the general journal, there will also be postings to the individual VAT accounts, like for instance, transaction number 1, we influence the VAT output. Here we have the VAT input, VAT output, and so we can carry on. In certain instances, there is no VAT on that transaction, so then that will not result in an entry in the general ledger account. If we can then start with the accounting entries in our general ledger accounts, we're going to focus on the VAT input account first of all, and VAT input represents an amount that you can claim back from SARS. That means that this account will be an asset account, so the more you can claim back, those transactions will be entered on the debit side, and reversals or claims against that claim of yours from SARS will be entered on the credit side. So for the VAT input account, if we have a look at the journals, the second transaction here, we have a credit entry in VAT input. Credit entry, this was for goods returned. So on the credit side of the VAT input account, we're going to put our 126 Rand. This comes from the general journal, and the corresponding debit for that credit is in creditors control. So our details here will be creditors control. This was transaction number 2, and we're doing this for March. (2002). So there we've already decreased our claim because this was a sale return, and the VAT amount is included on the credit side of the VAT input account. If we go back to our journal entries that we've already prepared in the previous question clip, we have our next VAT input influence, transaction number 5, and this was payment to a creditor, and only the settlement discount received will have a VAT influence. So this VAT input will again be on the credit side of the VAT input account of 28 Rand. So on the credit side, we're going to put another 28 Rand. Corresponding debit is in creditors control. So we will again write in creditors control. This is from the general journal, and this transaction was transaction number 5. Those were the only transactions from the general journal that we could include in the VAT input account. So now we go over to our totals again and just have a look at the references that we've already written down. The creditors journal, VAT input. Remember, in the creditors journal, we purchase on credit. So our liability will increase on the credit side, resulting in a debit entry in whatever we bought, as well as in the VAT input account. So we'll have to put on the debit side of the VAT input account, on the 31st of March, for creditors control. This is from the creditors journal. And now they provided us in the given information, not with the VAT column, but with the creditors control column. So we need to calculate the VAT. And if we take our calculation over here, that will be 10,801.50 cents. And we multiply that with 14 divided by 114. So that will give us our 1,326 Rand 50. So that will be the amount of VAT that we can include in our control account. 1,326.50. And that was from our creditors control. In the totals, we also have for VAT input from the cash payments journal, they gave us the VAT column. Now remember, in the cash payments journal, we will be crediting bank, and then the corresponding other columns will be the debit. So the VAT input account will again be on the debit side, influenced on the debit side, and they gave me the amount, so I can just put the 3,650 in on the debit side. This is from the cash payments journal, and our corresponding credit will be in bank. At this point, we've posted both totals and the individual transactions to the VAT input account, and now we are ready to close off this account to the VAT control account. Remember, you need the separate information of VAT input and VAT output complete your return, but we want to determine, do we now owe SARS or do they owe us, by closing off these two accounts to the VAT control account. At this point in the VAT input account, our debits exceed our credits, so we're going to add up these two amounts, and they will give us 4,976 rand and 50 cents. So that's the same total that we enter on the credit side. Because they told us to round off to the nearest cent, we work with cents. And the balancing amount here, the 4,976.50 minus those two small credits, that will give us a balancing amount of 4,822 rand and 50 cents. This is not a balance carried over, brought down. We're just going to close off this account to the VAT control account. This will also be an entry in the general journal. So for every credit, we need a corresponding debit. So we will end up with this asset closed off to the VAT control account, 4,822 rand and 50. Corresponding credit is in the VAT input account. This comes from the general journal. And this is for March at the end of the month. So we're done with the VAT input account. Now we can go over to the VAT output account. In my general journal, I had quite a few transactions influencing my VAT input. The first one here on this VAT output account, the first transaction is my drawings. So I have a credit entry in VAT output, and we calculated that amount as 174 rand and 30 cents. So in my VAT output account, on the credit side, I will have the entry for the drawings, 174 rand and 30 cents, and that was from the general journal, so my details will be general journal. The next VAT output account that got influenced by the separate transactions is the third one there. I've got a debit entry in debtors control and then resulting credits in the other accounts. So in the VAT output account, on the credit side, I will look for the 7 rand with the details debtors control. Remember, VAT output is a liability. I have to pay it over to SARS. So that means it will increase on the credit side and decrease on the credit side. So we have the 7 rand with the details debtors control. If we carry on with our transactions, we have a debit entry in the VAT output account due to the credit losses. Remember, we cancelled our liability for the original sale to the debtor, cancelling that liability on the debit side, 40 rand 53. So in my VAT output account, on the debit side, I will have the cancellation of 40 rand 53 and the details debtors control. Next transaction resulting in an influence in VAT output is not from the general journal. We now go over to our journal totals that was provided to us. And the first debtors journal had an influence on the VAT output account. Remember, this is for sales to debtors. So we will increase the debtors on the debit side, resulting credits in these other accounts. So the VAT output liability will increase. I'm liable to pay the VAT that I'm sitting with over to SARS, and they gave me the amount including VAT. If we can look at that calculation, it's the 6,589 rand 20 cents, multiply with 14 divided by 114. Remember, it's what we want divided by what we have. So this 809 rand and 20 cents will feature on the credit side of the VAT output account, corresponding debit in debtors control. So I've put my total in here, 809.20 rand debtors control, and this is from the debtors journal. Next total, debtors allowances journal, again influencing the VAT output. That liability that I created at the top is now reversed because this is not a valid sales transaction anymore. They provided us with the VAT column, so the 84 Rand will be a decrease in my liability on the debit side. So on the debit side, I'm going to put the decrease of 84 Rand. Corresponding credit is in debtors control, and this is from the debtors allowances journal. Our last transaction before we can close off this account as well to the VAT control is the cash receipts journal. This will also influence VAT output. They provided us with the VAT column. Remember, bank will be influenced on the debit side for cash receipts, resulting in corresponding credits in the other accounts. So my liability will increase with the 4,930, which we can just enter on the credit side. 4,930 on the credit side of the VAT output account. At this point, our credits exceed our debits, so the total of 5,920.50 Rand is what I would want on the debit side as well, and I do not balance the account, but I close it off to the VAT control account. This will also occur in the general journal. So my 5,920.50 Rand minus these two reversals will end up in my balancing amount that I can take to the VAT control account. In the VAT control account, I want to determine, do I now have a liability or do I have an asset? So do I owe SARS or do they owe me? We've already closed off the VAT output as well as the VAT input account. If you can recall from the general journal entries, the last entry they told you, you settled the amount due to SARS from a previous VAT cycle of 688 Rand. So this 688, because we paid it now, that had to be a balance in the VAT control account. So we started off this control account by owing South African Revenue Services 688 Rand. We made the payment for bank 688 Rand. So if we use this control account now to determine at the end of this cycle, do we owe SARS or do they owe us? We'll see at this point the credits 6483.97 exceeds the debits. So I'm looking for this total on the debit side as well, and I can calculate my balance carry down, brought down of 973 Rand 47. This account can either be an asset or a liability, and because of this credit balance, which one of the two increases on the credit side? It's the liabilities. That's why we identify the VAT control account in this exercise as a liability. So we will be liable to pay 973 Rand 47 to the South African Revenue Services. I hope that you will be able to do the posting regarding VAT transactions from your journals to your general ledger.